The market cracked in today with the Nifty closing at its lowest level in 18 months. Welcome to our special show, The Fear Factor. I'm Lata Venkatesh.
And I'm Anuj Singhal. Yes, there's quite a bit of fear on the street, but these are the headlines. Bulls flee Dalal Street as markets hit 52-week lows. Nifty clings on to 7,500 only to end at its lowest level in 18 months. Sensex sheds 150 points.
Banks lead the fresh round of sell-off. Bank Nifty hits a fresh 52-week low. The mid-cap index falls 0.7%.
European markets buck the otherwise pessimistic trend as oil prices rebound from fresh 12-year lows.
And Morgan Stanley's Ruchir Sharma says crude is near the bottom and expects prices not to fall too much below $30 a barrel.
All right, on the show today, we'll be joined by Dipan Mehta, member of BSc and NSC, and Rajat Bose of RajatKBoss.com to join or to discuss the technicals. Jan Lambrechts of Rabobank will take us through the views on the global markets.
Well, it was a day which started with bad vibes from crude. Asian markets felt the shudder and Indian markets just caught the cold. We saw the Nifty going into intraday fresh 52-week lows well below the 7,500 mark and then closing just barely above that mark, actually pretty close to the lowest point of the day itself, indicating further weakness in store. And perhaps the most debilitating factor is that the markets did not recover despite the fact that early trends from Europe were actually positive. So we underperformed some of the global markets today. Well, Anuj, torrid start to 2016, but today's weakness just indicates that there is more to come.
Oh, today's second half was particularly bad because today in the second half, Lata, the European markets were trading at high point of the day when we closed, and still the market was lower. Yesterday you saw quite a bit of recovery because of Europe. Today that one-to-one correlation was broken, and again the two big sectors, banks and IT, led the decline. TCS made a 52-week low ahead of earnings, and we have ICICI Bank, Axis Bank, making 52-week lows on a daily basis. IndusInd Bank, nothing majorly negative in the numbers, but the stock was down about 3%. So it's telling you that clearly there's a bit of a fear factor in the market. And today was secular. Even the mid-caps were not spared. And that's something that you need for this market to become healthy again, maybe. You need to see some of the, high-flying mid-caps and small-caps to correct. So whatever we look at it, today was a bad day because today you had lowest closing as well. So far, the market was avoiding 52-week closing low. Today you had the lowest closing for the Nifty and the Bank Nifty in about 12 months, or for the Nifty, in fact, about 18 months.
Yeah, I think particularly debilitating is the weakness in the Bank Nifty. It is, of course, more acute with the public sector banks because that index fell about 2.6% compared to 1.7% for the entire Bank Nifty, which is more private sector bank loaded. But the trends of the results from Federal Bank indicated that anybody with any exposure to the metal sector or to infrastructure are going to get it in the neck. It was another 13% increase in their quarter-on-quarter NPLs. Now, you can imagine if you scale it up for the entire public sector banks, their exposure to the metal sector. We have so far believed that crude fall in commodity prices is good for India. It may be good for the fiscal balance sheet. It's not very good for bank balance sheets.
Clearly, it's not. And Federal Bank is not a small bank. It's 48 rupee stock, so you may believe that it's, a smaller bank. It's not. It's a decently sized mid-cap bank and an FI favorite stock. So it's telling you the kind of problem that we have in the private sector bank space as well.
Oh, point taken. Over 1,000 branches. I mean, we cannot call it small. It's only small, perhaps, in relation to the top 5 PSU banks. But per se, I think it would be the third largest or fourth largest private sector bank. Okay, let's get you some opinion on that issue. Anup Maheshwari of DSP BlackRock Investment Managers says that he's yet to see any pickup in earnings growth, but hopes that earnings should see a pickup at some point in FY17.
If you look at it from December quarter last year, which is 2014 onwards, we've had consecutive quarters of degrowth as far as corporate earnings is concerned. I mean, that's been the biggest issue. Corporate earnings have just not grown. The broader earnings growth presents a better picture than the narrow earnings growth of the index. The hope generally is that we will see this somewhere in FY17, one of the quarters, maybe the fag end of it perhaps.
All right, let's get our experts then. We are now joined by Dipan Mehta, member of the BSc and NSC, and also Rajat Bose to discuss the technicals. Good evening, gentlemen. Dipan, today we had the case of a second half pullback. European markets were doing well, crude bounced back from the lows, but still our markets ended at new lows. What is that telling you about the overall market texture, and would you be brave to buy at current levels?
So I think we are consistently facing extensive FI selling pressure, and on most days the domestic institutions are buying and matching the FI sales figure, but the velocity and force with which the selling pressure is coming is what is causing the prices to correct lower and lower. Now, as regards your second question, whether it is a good level to buy or not, that's a bit difficult to call, because the reasons for the fall in the market are a bit very difficult to get a handle on per se. It's China, it's crude oil, it's overall fear of global slowdown in global growth rates, and when and all this will end is very difficult to say. Now, historically, whenever the world has been in a bit of a problem situation and India is doing fine, there has been a good buying opportunity. But locally also, I think the growth is not picking up, and still there are large sectors which are facing stagnation, and that's what the problem is, that you intuitively want to buy because the market has corrected significantly. It is around about 52-week lows, but when you get granular and start looking at which stocks and sectors and sub-sectors to invest in, then at least we're not getting as many ideas as one should. And the earnings season being around the corner, I would say it's better to wait and watch and see what the companies have to say before you take the plunge.
Okay, that's a very cautious approach, and perhaps good advice at a time like this. Dipan is not catching the falling knife. But Rajat, to get you into the picture, first, a positional trader on the Nifty. Would that be a more easier short, a positional short?
Well, yes, I mean, as I discussed in the morning, that unless 7705 to about 7715 gap is filled, any rally would be sold into, and that could be your above 7725 you put your positional stop and expect say 7400 even to be broken, and 7350 looks to be on the cards if 7487 to about 7460 support area gets broken, then 7350 could be on the card. So definitely a positional trade. You can actually take positional trades at many places. I mean, TCS could be one of them.
Okay, TCS could be one of them. Rajat, hi, good evening. What about the private sector banks, the larger ones or the largest ones, let's say ICICI, Axis, HDFC Bank, IndusInd, or even the tier 2 larger ones like Federal Bank, which corrected today? How would you approach them?
I was just checking the futures open interest gainers. Federal Bank tops the list with, I think, more than 20% addition in open interest there. And this suggests that Federal Bank actually could well fall further from the levels where it closed today. I think from here, say something like 43, 44, could well be possible. And Federal Bank generally, even if it posts record volume sales on one particular day, it continues to fall even on subsequent days. Normally record volume sales post a bottom, but in this case that may not happen. Regarding say IndusInd Bank, as I told you in the afternoon, that say if it were to break 920, then it can actually slide further and test 900 odd levels. And I am actually pretty disappointed by IndusInd Bank's price performance, because the results appeared not all that bad, yet it sold off, and the way it sold off, that unnerved me pretty much, because HDFC Bank and IndusInd Bank had been the two banks I was banking on. But now it seems that even IndusInd is under severe attack.
Okay. Well, actually, I was going to toss that to Dipan Mehta. We got both those numbers. The bad loan as a percentage of total loan book for IndusInd Bank is still very, very restrained, and there's hardly any percentage-wise increase. But in Federal, it was really bad. Dipan, how would you approach both of these stocks?
First, IndusInd Bank disclosure that we and our clients are invested in it, and by and large the results were exceptionally good given the kind of environment in which they are operating in. Clearly they are gaining market share, and I was quite impressed that now they are getting back onto branch expansion, which means that they see the future far more confidently than perhaps their peer group. A very good set of numbers, I think, but maybe expectations had got already built in, and the way the market situation was, the stock just got sold off. But I think at corrections, certainly I think investors could look at getting into IndusInd Bank, making it part of their core holdings. On the other hand, Federal Bank, I think again another negative quarter, surprises on the NPA front. And I think that's going to be the story as far as banks are concerned, not just CSU, but even some of the other private sector banks. You are going to get surprises as far as the NPAs are concerned, and there's a lot of noise and thinking about what is even performing asset may get classified as non-performing because of various norms or under pressure from the regulator. So I would approach the banks with a lot more caution than some of the other sectors. Having said that, I think only 3 banks come to mind which will not face a problem. One was IndusInd, which came out with its numbers, and the other 2 to watch out for would be Kotak Bank and HDFC Bank, I think. And my sense is that after this earnings season is over, investors will migrate to these 3 counters just because of the quality of the NPAs which they have and the growth rates which they are able to deliver. Having said that, all these three banks I named, HDFC, Kotak as well as IndusInd, we and our clients are invested in.
Okay, point taken. Deepan, the other problem for this market has been IT. I mean, TCS is technically in uncharted territory. It normally goes on the results day at all-time highs, and today we have 52-week low ahead of numbers. What do you make of that? And going forward, do you think IT will remain an underperformer?
See, now IT is you have to split IT into 2 distinct categories. One is the mid-cap IT stocks, which are still able to deliver that 15 to 25% type of top-line, bottom-line growth because of various reasons, like they're getting benefit of digitization, they've taken interesting acquisitions because they're able to grow their business. And then there are the large-cap IT where the base effect is coming into play, and by and large, large-cap IT does depend on the broad global economic trends for them to generate the growth, and that being the way it is, we're going to have a lot of challenges as far as large-cap IT is concerned. So I think we should brace ourselves for all the 4 large-cap IT companies to come out with more or less flat set of numbers, and maybe 1 or 2 divisions or 1 or 2 geographies are done badly, then you could see negative quarter-on-quarter or negative year-on-year growth rates as well. And although valuations are perhaps historically at the lower end, but the way the growth rates are, and when you see even 2 years, 3 years down the line, you don't really get the confidence that these companies can again start growing at that 15-20% type of growth rate, whereas the smaller IT companies can continue to grow purely because of their size. So investors should get focused more on the smaller IT companies and exit out of the larger IT companies.
Okay, so the traditional refuge in times of crisis, IT, is not proving to be that. Banks are not helping at all. In fact, they are the kind of the lowest common denominator here, the poorest performer with 1.8% loss, like we just said. Well, let's get some trading strategies from Rajat. Rajat, very clearly you have avoided the big boys and gone for the mid-caps. United Spirits among them is your buy.
United Spirits, I continue to like. United Spirits, to my mind, can actually post a little more bounce from here, at least say something like 2900, 2890 to about 2902 is my target, and I'm putting a stop loss below 2798. Today when the markets were falling, this stock was actually maintaining good strength, so probably this strength will be carried over to tomorrow. That's why I've chosen United Spirits to go as a long call.
Okay, and what about CEAT, Rajat?
Well, CEAT was another good performer. I mean, this was a standout performer because right from the morning it never showed much of a weakness, and even towards the end it did not show that much weakness. So I would say that CEAT you can buy, put a stop loss below 998, and 1028 to about 1035 are the 2 targets for tomorrow. CEAT might well continue its upswing because it has completed its correction. It seems the way it has progressed today. So probably this will be one of those island inhibitors in this bearish ocean.
Okay. Well, Dipan, a final very quick question to you. Other than the 3 banks you mentioned, is there anything that you will pick for value with the markets falling?
Well, within the banking and financial services space, I think
No, I meant outside.
non-banking finance companies and the housing finance companies could be quite interesting. Outside the banks, yeah, I think the traditional ones, I think pharmaceutical companies, we're looking for a good set of numbers from a whole host of mid-cap pharma companies as well, and a lot of them have launched new products in the US market, so they should get benefit of that.
All right. Thank you, Dipan and Rajat, for joining us. Well, the common message from both of them is that the Indian markets have not seen their worst just yet. Positional shorts on anything, Rajat said, is possible. And Dipan would rather watch the earnings season before he would try and pick any value. Though, of course, those three private sector banks, IndusInd, HDFC Bank and Kotak Bank, are his favorites. But you're getting some seminal messages, as you can see, in that yellow band. Crude is off its lows. Dow Jones Futures is up about 0.65%, 2/3%. So is at least the global market troughing out, at least in the near term? That question to Jan Lamberts of Rabobank after this break.